Belgium, Germany, and Denmark make up the most taxed countries. Each sees about a 40% tax rate for single childless citizens.
It's a reality? You're telling me that's a reality?
100%.
Wow, I'm shocked.
With exploding operating costs of governments and OECD dreams of implementing a minimum tax rate for companies, the time may be right to take your hard-earned money offshore. But with so many countries offering offshore banking services, how do you choose the best one? We've done the research for you. In this video, we reveal the 5 best low-tax burden countries that offer financial privacy and stability, as well as an attractive banking system. From the luxurious banking haven of Switzerland to the exotic shores of the United Arab Emirates, get ready to discover offshore banking destinations that could take your wealth to the next level.
Well, the reason the rich don't work for money is number one expense is tax.
Number 1. Singapore. Singapore has emerged as a prominent offshore banking hub due to its strategic location, stable political environment, and pro-business policies. Singapore's offshore banking history began in the 1960s, when the government recognized the need to diversify the economy and reduce its reliance on manufacturing. The government introduced various measures such as tax incentives, regulatory reforms, and establishing a central bank to promote the financial sector. As a non-resident in Singapore, depending on your personal income, you can live with a really low tax rate that starts at 2% and goes to a maximum of around 22% for our viewers with big pockets. Also, for companies, the normal tax rate is around 17%, with even more tax exemptions for the first 290,000 Singapore dollars you earn. Singapore's political stability is one of its greatest strengths. The government is committed to maintaining a business-friendly environment, making it an attractive location for foreign investment. Singapore's robust regulatory framework is another significant advantage. The Monetary Authority of Singapore is one of the most effective and efficient regulators globally, ensuring that banks adhere to strict standards to maintain financial stability and promote consumer interests. Singapore's strategic location is also advantageous, providing access to Southeast Asia and major markets such as China and India. The highly skilled workforce in Singapore, including a well-developed infrastructure, is another strength. But there are some drawbacks to banking in Singapore, such as the relatively high cost of living and strict laws and regulations.
If you're caught smuggling drugs into Singapore, the penalty is death. Which makes somebody like myself nervous when you travel with the people that you travel with.
Enjoy Singapore.
Overall, Singapore's advantages outweigh its disadvantages, making it a top destination for offshore banking. Let's move on with a European option for you. Number 2. Switzerland. For centuries, Switzerland has been known as a top offshore banking destination for the world's wealthy, offering secure and discreet financial services. Its reputation for safety and stability dates back to the Middle Ages, when wealthy families stored their riches in secure vaults in the Swiss Alps. Since then, the country's banking system has evolved into a highly regulated, reputable institution, catering to high-net-worth individuals and corporations seeking a range of financial services. In Switzerland, you can get away with a total tax income rate of less than 5%, but as cantons and cities have different tax rates, it really depends on where in the country you do pay them. For companies, tax rates do also vary a lot depending where in Switzerland you do apply, although the map does look a bit different. Swiss banks are renowned for their banking secrecy laws, offering clients the privacy and discretion they crave. However, this has led to increased scrutiny from governments seeking to crack down on tax evasion and money laundering. The recent Credit Suisse bankruptcy shows just how involved the government is when it comes to ensuring the integrity of the country's banking system.
From laundering money for drug dealers to spying on employees and leaking client data, it's been a wild ride for Credit Suisse.
Despite these challenges, Switzerland remains a leading offshore banking hub thanks to its long-standing tradition of safety and stability, range of financial services, and reputation for discretion. While high fees and minimum deposit requirements may make Swiss banks inaccessible to some, they remain attractive to those seeking secure and reliable financial services. Number 3. Hong Kong. Hong Kong is a thriving offshore banking hub in East Asia, known for its rich international trade and commerce history. The The city's favorable business environment and strategic location have attracted a large number of global banks and investors, making it one of the world's leading financial centers. Hong Kong's offshore banking industry began to take shape in the 1960s and has since grown rapidly, with over 200 banks operating in the city today. This growth was further fueled by the liberalization of the financial sector in the 1980s and the rapid development of the Chinese economy in the 1990s. Hong Kong's strong regulatory framework, sound legal system, and low levels of corruption have contributed to its reputation as a safe and stable financial center, making it an attractive destination for investors seeking stability and transparency. Speaking of being attractive, for personal and company tax rates, you pay a maximum of around 17%, where you are, at least as an individual, relatively fast. But the tax rate maxes out there, so not too bad, right? The city's territorial tax system is another advantage for businesses and high net worth individuals looking to minimize their tax liabilities. This means you only pay tax on income you earned from inside the country. Hong Kong has no capital gains tax, which is impressive on its own, no withholding tax on dividends or interest, and no estate duty. Its proximity to China and its status as an international business hub make it an ideal location for businesses looking to expand their operations in Asia. On the other side, Hong Kong's high cost of living can make it an expensive place to do business, with property prices among the highest in the world, and labor costs can also be steep. Additionally, the city's economy is closely tied to China, which means that any economic slowdown or political instability in China could significantly impact Hong Kong's financial sector. Next, we continue with what could be a wet dream for many of you. Number 4. The United Arab Emirates. The UAE has become a hotbed of offshore banking activity in the Middle East. Since the 1980s, the government has been pushing policies to diversify the economy, and the establishment of the Dubai International Financial Center, DIFC, in 2004 marked a significant milestone in creating a world-class financial hub in the region. Today, the UAE is a major offshore banking hub with a well-developed regulatory framework that encourages foreign investment, 0% personal income tax, and no corporate tax.
Habibi, come to Dubai!
The UAE's strategic location at the intersection of Asia, Europe, and Africa is one of the main advantages of the country as an offshore banking hub. This allows for easy access to markets across the region and provides investors and companies with unparalleled opportunities to expand their business. The company's banking sector is also highly developed, with a diverse range of financial products and services on offer. But the UAE's reliance on the oil industry is a potential challenge for the company's economy, as fluctuations in global oil prices can have a negative impact. Additionally, the strict regulatory framework can make it difficult for some investors to set up offshore accounts or engage in certain transactions. Political instability in the region is another risk to consider. Despite these challenges, the UAE remains an attractive destination for offshore banking. Its location, business-friendly environment, and the regulatory framework make it an ideal destination for investing or setting up offshore accounts. As the country continues to diversify its economy, the future looks bright for the UAE's offshore banking sector. Now, we leave the Arab Emirates for our last amazing country. Number 5. Panama. Panama is a well-established, pure tax haven in the Caribbean, offering extensive legislation that strictly regulates the country's offshore jurisdiction and financial services. It imposes no income, corporate, capital gains, or estate taxes on offshore entities that only engage in business outside of the jurisdiction. Panama's offshore jurisdiction offers a wide array of excellent financial services, including offshore banking, the incorporation of offshore companies, registration of ships, and the formation of Panama trusts and foundations. One of Panama's rare perks is the ability for offshore companies to conduct business locally. However, any business conducted within the jurisdiction is subject to local taxes. The country also has strict banking secrecy laws designed to protect the privacy of account holders, making it a popular destination for individuals or businesses seeking financial privacy. People or businesses of any nationality may incorporate within Panama, and it has few tax treaties with countries that have strong economic ties, further protecting the financial privacy of offshore banking clients. The popularity of Panama as a tax haven made global news in 2016 with the publication of the Panama Papers. The papers revealed some 214,000 offshore business entities and shell corporations involving high net worth individuals, government officials, and organizations from 200 countries. While most of them were legitimate, some had been set up or used for illegal purposes, including fraud, tax evasion, money laundering, and the avoidance of international sanctions. The scandal damaged the reputation of Panama and the law firm Mossack Fonseca, which was based there. Nonetheless, Panama remains an attractive tax haven due to its favorable tax policies, banking secrecy laws, and extensive financial services. The world of offshore banking offers a range of opportunities for international investors and businesses seeking to access global markets and reduce their tax burden. The 5 countries highlighted in this video, the UAE, Switzerland, Singapore, Hong Kong, and Panama, each offer unique advantages and challenges for offshore banking activities. Only not living in a country at all could be cheaper than that. Ultimately, the best country for offshore banking will be based on the specific goals and objectives of the investor or business, as well as factors such as regulatory environment, tax rates, and infrastructure. This brings us to the end of today's video. Did you ever consider living in one of the mentioned countries, or do you have other ideas how to reduce your tax burden? Make sure to leave it in the comments. Subscribe to Ape Finance for more exciting finance content like this one, and we will see you in the next video.